and good morning to everyone. Now, what is interesting is that the first session that we had on economic outlook actually also talked a lot about the topics that we are going to talk about, but it gives us a very good start in terms of moving into the specifics of our own panel session, and many members and participants will be aware. The title we are using here is because we got very bored with the word tax reforms. We've been saying this for umpteen years. I mean, Professor Ye knows this, Amajit knows this, and I have been speaking on this area. So nowadays we come up with the word reconstruction. Hopefully it gets, it's much more change and perhaps people pay attention. Anyway, the topic therefore is on tax reforms, but we are calling it reconstruction. Why? It's very appropriate in the context of the COVID-19 pandemic, right? So we are now looking at, well, we should have pressed the reset button and trying to improve the systems that we have. That's the issue in terms of the pandemic. Taking opportunity during the pandemic, reforming and changing. Unfortunately, our country has in some ways stalled a bit because we got diverted by the COVID-19 pandemic. We are not really doing anything else in the context of reconstruction. We should be using this opportunity to do a lot of things. Personally, I thought, I mean, just making a very sweeping comment is personally, I thought the emergency gives you a great opportunity to do a lot of things, hopefully the right things. Unfortunately, that's not, the challenge has not been taken because sometimes the issue is the issue of politics comes into tax. It is a very real issue. There was a question earlier, in the earlier panel about the influence of politics on taxation. Influence is always there. We cannot get rid of it, but let's talk about it later. Let me perhaps welcome my panelists, and perhaps to start off, I have a few slides that I wanted to share with the participants, and then from there we will go into a discussion of the specifics at hand and specific topics that we want to talk about. So let me just move to the next slide. This is taken from the World Bank's recent report, which was issued on Malaysia in regard to Malaysia achieving the high-income nation status. You know, and this text was 6 areas and so on. Again, to many of us, it's not very new. We hear the same things being mentioned time and again. The sad state is, however, the Malaysian government has been going through changes. We've now have the 3rd government in place, and so dynamics change, focus change. And these things will not go away. These are actually repeating what has been said many times over the last, I would dare say, over the last 8 to 9 or even 10 years that we need to look at, right? Long-term growth, we all know that's one of our focus in terms of the GDP growth rates. Competitiveness, we all aware, creating jobs very crucial. Our average wage levels in the country are very low, and therefore later we can talk about this issue of personal tax. Why is the World Bank focusing a lot on personal taxes? If our salary levels are kept low artificially by focusing on foreign labor, we will never get out of that particular issues that we have. Modernizing institutions, we all know this. Promoting inclusion, yes, in terms of transfer payments, helping the poor and so on. And then financing our shared prosperity. That's where tax revenue comes in. How do we spend on all the initiatives that we want? The next slide, please. Yes, this one I will later get, especially our panel member, Professor Ye, can talk a little bit about that as well. We all know this, revenue collection, the decline. We all know the GDP tax to tax ratio has been declining and so on. So that's been the motivator in terms of pushing for some kind of reform or change or improvement. And we are below the average of some of our competitors. But we must remember that some of our competitors have different economic cycles, They're in a different economic levels of growth. So we compare ourselves with some of the countries in ASEAN, and we are still low than perhaps Thailand or even the Philippines or Vietnam. And so those are the challenges we face. How do we get out of this in terms of getting our revenue to be tax revenue to be higher as a percentage of GDP? Next slide. This talks about the key revenue areas. And again, this slide that the World Bank focused on was personal taxes. And they're commenting that our personal tax collection is low. Again, I think that's because we generally have a low wage level. I'm not sure whether the World Bank is trying to imply that we should increase personal tax rates and therefore tax the higher income even more. And we have already done that in some ways in the last 3 years, where the personal tax rate has gone up 30% and so on. And the idea was actually taken from the World Bank. And the World Bank continues to imply that we should be apparently increasing our tax rates, or perhaps looking at progressivity. We'll talk about that later as well. And then the other side, on the right-hand side, is a consumption tax. Again, one of our panelists, Rosita, is from the customs, and I'm sure she knows this very well. And that's because our consumption tax is not broad enough. So perhaps that's where we want to make changes in the future. Next slide, please. So this is what the World Bank says in their report on higher revenue could be achieved. And generally I find that if you look at items 1, 2, and 3, it's all about personal income tax. So it's fascinating how 3 out of the 6 items stated on this diagram are all related to personal tax. Detailed analysis, progressivity of the current personal income tax framework, revisiting current reliefs and exemptions in the income tax framework, which is an area that I myself and many others have mentioned for a long time, that perhaps we need to curtail a lot of the reliefs and exemptions we have. And then after that, there's the item 4 is looking at new taxes. And this one is a very sensitive area always. Of course, we have heard the Minister of Finance coming out to say no new taxes this year, which is fine, because this is, when the World Bank says this, they're not talking about this year, they're talking about the midterm. Hopefully, maybe in the next 5 to 10 years, we will see some changes. So I think people get very sensitive when you mention capital gains tax. Immediately, a lot of people almost get heart attacks. But the issue is not to worry about this, because in the end of the day, capital gains tax will come in the context of Malaysia, but it's at a later stage as we develop in our economic growth rates are higher, and as we develop economically, it does make sense to have a full-blown capital gains tax. And right now, we are quite happy with the real property gains tax. Wealth tax, again, gives people heart attacks, but wealth taxes do not really generate revenue per se. They're not a revenue generating measure. They have the issue of good from an economic cycle in terms of distribution of wealth. It is a source of some income, but it is not going to generate as much as you want. So you've got to look at the rationale why we talk about this. Of course, number 5, attracting quality investments, maximizing the gains from tax expenditures. This again is all about actually related to tax incentives. Now, in various forums that we've held, whether it's MIA or many other forums, we have spoken a lot about tax incentives. And I think we've spoken enough. And maybe in this session, we won't talk too much about the incentive side, but we all know tax incentives are needed to generate quality investments. But are these the only thing that investors look for? And we have seen a lot of surveys which will tell you that investors look for many other things. And this is just one of the items. So is this a deal breaker for a foreign investor if they do not get all the incentives? Not necessarily. There could be other ways of attracting investment. So I do think the incentives needs to be focused, selective, And let's not be too generous in giving away all our incentives, because by giving away a lot of incentives, giving exemptions, we lose tax revenue as well. But we need to look at it holistically. And the last one, item 6, is the capacity, tax capacity of the federal and state, and in this case, state governments. But state governments do not really collect taxes. They do collect some land, quit rent and assessments. And if you're looking really at the taxes, we are looking at the federal government. So capacity is important. And that's where we will talk about things like shadow economy, things like, what about tax administration? In one of our sessions, in our questions that we will talk about, tax administration, whether it's in the Inland Revenue Board or at the customs, is an area that needs to be seriously looked at and improved. And we'll talk about this later in terms of technology usage as well. Let's move on to the next slide. This is a chart that I have shown in many forums that I am speaking on. And this is a chart that I developed, which is simply telling you that our objective is to enhance tax to GDP ratios, improve the buoyancy of the tax system, maximize tax revenue in the context of economic growth. But there are 4 pillars that I always say we should look at seriously. And in our discussion afterwards, we will touch on all this in some ways. Obviously, the underground economy is important, and we should do more. Many articles have been written, many comments in the media about focusing on the shadow economy, the underground economy, the black economy, and the informal economy. They're all the same thing. And this is about people getting away from not paying taxes, all right? And why is this happening? So perhaps the authorities can do more. Similarly, B is reducing tax leakages. This is something related to perhaps tax incentives as well, and perhaps too many exclusions that we have, and perhaps you're losing out. Item C, there's a slight typo there. Item C, enhancing tax administration. The word tax is missing. So enhancing tax administration, and this is something I think we'll spend some time afterwards in the panel about what else can we do in terms of improving tax administration. This is where I think the play on technology comes in, and digitalization and so on. Pillar D is about new sources of revenue. This is a sensitive one, capital gains tax, wealth taxes, even GST and all that. We'll touch on this a little bit towards the end. To be honest, if we are very serious about looking at the nation's improvement, we all know that all these new taxes are necessary. But I think what is missing from all our discussions with authorities and the tax agencies is that we are not seeing a plan being put forward, a 5 to 10-year plan, which shows tentatively when capital gains tax will come in, when consumption tax will come in, when a wealth tax perhaps could come in. You need to see this, and I'm sure the authorities may have a plan, but unfortunately, we couldn't get a speaker from the MOF to sit on our panel due to other conflicts that they have. And but we need that. Otherwise, we are talking in isolation. Every year we talk about this, and we talk about this change, but we'd like to see where it fits in terms of a calendar of 5 to 10 years. And these 4 pillars that we talk about here, obviously overarching all this is the need to ensure that once these things have worked out and you have initiatives in place and you are seeing improvement in revenue, you should look at reduction in corporate taxes and personal income taxes as a motivator for the effort that one does. So you're moving towards perhaps reliance on improvement in collection, reliance perhaps on indirect taxes, and then you bring down your corporate and personal income taxes. Now, you obviously cannot do this unless you meet your benchmarks for economic growth rates and then your tax revenue growth rates. So I've just stated here the timeline within the next 5 years. Well, the pandemic has changed a bit of this, and perhaps it may be a bit longer. But I think this is the bigger picture in terms of enhancement. And I hope this is where the country moves to, at least in terms of initiatives to move forward. The next slide talks about some enablers. And I won't spend time on this, but again, participants will receive these slides and will obviously take note of it. Everything about access to data. Authorities' access to data, how is this? Why do we as taxpayers need to fill up form after form when our data is lying somewhere in another agency and so on? So why can't agencies share data, right? So data analytics comes into mind, using data effectively. I always worry when tax authorities talk about tax and data analytics and they're all moving into this. I'm not sure whether everyone understands what data analytics is. Are you doing it efficiently? And I hope that is something we can hear more of in the future. Using effective tools, software is obviously important. Worse still is that if you don't have trained personnel, then everything you are spending on data analytics and technological tools goes to waste. And it is something that we need to manage very well. Next. Just to continue that, I also believe, and I'm sure panelists do agree, that we need to build a culture of tax compliance as a national duty. Inculcating into the young and the workforce. And this is, however, not easy because many see paying taxes as robbing them, you know, that they are losing their money is going into a black hole, and they get very concerned about how this is being done and spent, how it's being used and spent. So accountability by the government and how tax revenues are utilized is essential. We do have some accountability when the budget comes out, but it's not detailed enough. Ministries need to give regular reports of how they're spending money and how is the wastage being cut. So we'll perhaps have a word with this when Professor Ye comes on board in terms of sharing some of his thoughts. Simplification, efficiency of tax administrative rules. It's also been talked about for many years. But where is this simplification happening? And sometimes we get the impression that taxation is just getting more and more complex, which is very true in the context of perhaps income taxation when you look at transfer pricing and all this. But some things are necessary, but some things can be improved. Simplification can also be done through technology. And obviously, the other enabler very relevant to customs is also the enforcement activity, anti-smuggling, countering under declaration of imported values of goods. This is very common. And this many successes have been achieved by customs in the past. But what else can be done to manage this? We hear about the what we call imitation products. We look at cigarettes, and we look at products coming in which are not paying excise duties when local products have to pay. So you have anti-smuggling. But what else can you do? Tax audits as well are important in the context of recovering revenue. And lastly, the other enabler that we continue to stress is to keep looking at the global regional scene. And our tax system cannot stay static. New types of business models, and this is where digital taxation comes in. And we've already started moving into this, and we will probably check on with Puan Rosita of how the digital service tax is going and understand how things operate. So that, in a nutshell, some of the enablers that we need in terms of moving forward. And with that, I think I will now move on to discuss a bit more detail with our panel members. Professor Ye, Amajit, Puan Rosita, thank you very much for joining on to this particular panel session. And let me just start off with perhaps Professor Ye, in terms of taking a cue from the previous session and maybe summarizing in a way possible the current fiscal situation of the nation, including public expenditure management. Where are we in currently? And perhaps your thoughts on this, and then we move on.
Okay. Thank you very much, Dr. Renda. I think you have given us a very comprehensive coverage of the present state of our tax situation, especially the challenges facing us in the post-pandemic period. What I'd like to do here is to basically look at 5 areas. One is to discuss the current fiscal situation in terms of the impact of the COVID-19 spending, and then highlight 4 other areas in terms of the size of the spending, the impact on our fiscal deficit situation, and how those have the recession in 2020 last year had affected our revenue as well as expenditure, and then importantly touch upon the debt position that have been touched upon in the earlier panel. Now, just to put our situation into context in terms of the fiscal response to COVID-19 crisis, in summary, Malaysia's stimulus packages, all in all, about 5 of them, they are estimated at around 4.4% of GDP. This is on-budget spending by the government, whereas it has been reported that our total COVID-19 stimulus packages all amounted to slightly over 20% of GDP. But in terms of on-balance sheet, it is only 4.4%. And if you look at the global average is around 7.4% of GDP. And advanced economies, in fact, spend about 11% of GDP, and other emerging economies, including Malaysia, the average should be around 3.8%. So in terms of Malaysia's fiscal response, I think we are consistent with the upper middle income status, as well as in line with factors like, for example, the severity of the impact. Being an open economy, of course, we are subjected to greater impact, and also our available fiscal space of buffers and other social economic, as well as political consideration. So in all, the fiscal response has been, I would say, measured. But let's look at the fiscal deficit situation. Now, the fiscal deficit nearly doubled to 6.2% of GDP, from a negative deficit of 3.4% in 2019 and 3.7% in 2018. You see. Now, this deficit is actually less than the 6.7% deficit experienced during the global financial crisis in 2009. Of course, the earlier panel did mention about our long history of having fiscal deficit. In fact, this is the 23rd consecutive year of fiscal deficit. But as long as we take note that the rate of economic growth is higher than the interest rate, then basically the deficit is sustainable. But as we know, continuous deficit along with rising debt levels have actually elevated the country's financial vulnerabilities. So we are now at a more vulnerable position. Of course, when we look at the deficit in other countries, advanced economies last year, in fact, their deficit rose by an average of 14.2%, and emerging and Asian markets 11.2%, and for ASEAN 5 is 6.3%. So we are not out of line in terms of our fiscal deficit situation last year. See, but more importantly, let's look at the trends in the government collection. Now, both government revenue collection as well as expenditure, government revenue declined by 14.9% to 225.1 billion in the previous year. And more importantly, direct tax revenue actually fell by 21.5%, whereas indirect taxes fell by 8.6%, and non-tax revenue declined by 22.3%. So we see that the 14.9% drop in government revenue, the bulk of it are actually contributed by the fall in direct taxes, and 1.5 percentage points due to the consumption of indirect tax, and then 6.5 percentage points due to the non-tax revenue. So what is evident here is that in these statistics is that the direct taxes are actually more responsive to changes in economic performance compared to indirect taxes, or what we call the sales and service tax. You see. So another salient point is that the tax revenue structure, as mentioned in the World Bank report, is that we have a fairly high non-tax revenue component amounting to about 1/3 of the total in 2020, and it is estimated to also range around 25% in 2021. You see. Now, of course, the tax structure is important. We need to look at it more closely, given that what Dr. Virender Singh has mentioned, we need to not only tax better, but in the coming years, we need to tax more. See? So looking at the performance of the direct tax collection, we find that corporate income tax, although they fell by 21%, the petroleum income tax actually fell more by close to 38.5%. But interestingly, individual income tax actually rose by 0.7% in 2020. So the trends that have been highlighted by Dr. Virender shows that our position in terms of the structure, the trends are concerning in a sense of continuing to decline relative to the overall GDP, and we are relatively lower, worse off compared to the upper middle income countries as well as high income countries. So that situation has actually deteriorated further in terms of cross-country comparison for 2020. Now, on the government spending side, you find that the operating expenditure actually fell by 14.7%. Now, the key salient feature here is that both government revenue and operating expenditure are now almost the same. The surplus, operating surplus, has actually narrowed to around 400 billion. So there's a concern that this year it will even shrink further from 400 million last year in 2020 to around 200 million, assuming that we are on track in achieving our revenue targets for this year. And finally, the fifth area is actually the government debt position. Now, what we note here is that total government debt, direct debt, actually has risen by 10 percentage points from 52.5% of GDP in 2019 to an estimated 62.2% of GDP last year. In fact, we have already exceeded our debt ceiling of 60%, the revised debt ceilings. Now, of course, this sharp rise is also partly attributed to the 6.3% drop in nominal GDP. Last year, our nominal GDP actually fell from 1.49 trillion in 2019 to around 1.5 trillion in 2019 to around 1.49 trillion in 2020. So as a result, our total debt now is close to 880 billion in 2020. So the double-digit increase of 10.9% last year is actually not sustainable if it is maintained over the long run, because although we note that 74% of the debt is actually funded domestically, but what it means here is that the high debt level has actually shrunk the government's fiscal space. So in summary, the pandemic-induced recession last year has actually derailed the country's fiscal consolidation plan. Actually, we had planned to shrink the fiscal deficit to 3.4%, but instead it has widened to 6.2%. And for this year, it will be challenging to meet the 5.4% deficit target, or some earlier panel mentioned about 6%. So especially if the revenue collection does not meet the projected 236.9 billion target set in budget 2021, you see. Now, of course, the key concern, as I highlighted earlier, the government revenue is now about equal to the operating budget, which means that the entire development budget of slightly over, used to be over 50 billion, but now for 2021 is budgeted at 68.2 billion, or 3.6% of GDP. That will have to be financed entirely through borrowings, no more surplus from the operating balance. So in summary, overall, the fiscal position, similar to all other countries, has deteriorated because of the recession last year. So I think the current topic of restructuring the tax system, very timely, as well as that has long been deliberated. And then more importantly, we need to look into some of the key measures and prioritize the restructuring in terms of ensuring that our revenue base continues to broaden, and then importantly meet the objective of what we call a broad-based, low rate taxation system that can sustain our economic recovery, and of course move on later to meet the needs of financing a high or what we call developed economy prospects. So with that, let me end here and stop here, and then let Dr. Virendra continue with the many challenges that he has highlighted.
Thank you, Professor Ye. So that gives us the background, right, as to why there is a need to enhance tax revenue, right? And the main measure that we normally, as highlighted by Professor Ye as well and the previous panel, is about this low tax to GDP ratio, and how do we enhance it? And then some will tell us, from a business perspective, our corporate rate is high, income tax rate, compared to our neighbors. So that's another story. The other aspect we have in terms of some of the current situation, the issues are too many tax incentives being mentioned by various economists, that we are giving too much away. And we need to tighten this. And I think some steps are already in place, at least announced in the previous 2 budgets, that is being done. But that's still the mantra. It's being done. That hasn't been resolved in terms of perhaps tightening incentives. But the pandemic resulted in more incentives being given because you wanted to attract more businesses. Reality of life, we haven't seen any real substantive response from the authorities. They have these incentives that we just announced to get people to relocate, businesses relocate. Have they really worked out? We've had a few, but I don't think we are getting the numbers that we want. So then the issue of tax incentive being managed. The other issue is World Bank is saying personal income tax rate is not a progressive tax rate. And that's a bit worrying as well, because as I stated, one of the challenges we have is that average wage levels of Malaysian workers is low. And therefore, for them to advance up, as you earn more, as you progress, as your income levels go up, obviously you pay more personal income tax. So we are not seeing, I suppose, that rise to be significant. The other weakness is indirect tax revenue. I think that's clear. So given this scenario, we therefore see a number of weaknesses and the rationale why we need to collect more. But I think the more important thing that was summarized in Professor Ye's presentation was the issue now is to collect more, but the other side of the coin is to spend better, so that all these transfer payments that we have, the subsidies that we need, and now because of the COVID pandemic, we've had a lot of payments out to bolster businesses, to get them to recover. And you will find that it will not be easy just to remove all of this quickly. It will be expected that more may need to be given as you continue. So there's a huge amount of expenditure that we pump into the economy. And then we need to measure the outcomes as well. So those are basically the weaknesses that I think we see, perceived, and all that, coupled with the fact that we have this so-called, shadow economy and informal economy, which every country has. We're not the only ones. But the challenge here is, how do we manage the shadow economy? I don't want to spend too much time on this because we also have a session, I think tomorrow, where we will have a speaker which will talk about the shadow economy, and hopefully we'll talk a bit more. But we understand what it is. So it's to collect more from those who should be paid. And there are a number of perhaps potential taxpayers who have not been paying what they should be paying or be paying less. This applies both to customs as well as to income taxes, right? So let's therefore move on to talk a little bit about, before we go into the specifics, let's get Amarjit to talk a little bit more about, I think, more on the tax administrative measures that we may need to utilize to further enhance revenue collection. So Amarjit, over to you.
Thank you, Doctor, and a very good morning. Still morning, so very good morning to everyone. I hope you can hear me clear. I'm actually not in a sort of a place which I normally do this virtual. I'm actually in one of the government agencies. I had a meeting earlier, and now sort of having their generosity in using their place to be able to be with you all. So, thank you, Doc. I think what I want to maybe say is, reconstruction of the Malaysian tax. I think in my mind, I would say there are sort of 7 big points, and a lot of this, we've heard from Dr. yourself and Professor earlier, and maybe if I may just take the liberty of rattling it, and we've heard this, right? So number 1, broadening the existing consumption tax base. We've heard about that. We've heard about reducing the corporate tax rate. Now, a couple of months ago, Philippines was higher than us. They have also now introduced changes. They're coming down to 25, with the potential of coming down to 20 as well. Now, if that happens, I think we're probably going to be the second, the country with the second highest corporate tax rate in ASEAN. Doctor mentioned a number of times the 3rd point, which is removing ineffective tax incentives. And in fact, I think I was given the chance by Dr. Lee in the earlier session, maybe a couple of months ago, I think, Doctor, where we spoke about the incentives, the issues with the incentives, and how we need to make incentives a little bit more effective. So I'm not going to go into that. The underlying theme has always been about also creating a simple and more transparent tax system. Today, what I want to maybe spend a little bit more time, Doctor, is really about the tax administration's reform in itself. And this is now really using technology. And, I had a few slides, I think 2 or 3, if I can have them up. So this is not something that, I thought by myself. It's actually a work stream in the OECD. And they call it digital tax administration, digital tax transformation for the administration, version 3.0. So, and as I was reading the report just came out in November 2020. So this is still hot out of the oven. In fact, it had inputs from various different tax administrators. We had the Singapore Tax Authority also participating in the whole exercise, and they had contributed some aspect of the report. The one thing that really caught my eye was the analogy given in the report. And so we've had digital tax administration version 1.0, which was many, many years ago, and then came digital tax administration 2.0, which is, Malaysia, I think, is far ahead in many jurisdictions. So e-filing, running some form of data analytics behind to target the taxpayers to audit. We've also heard about e-audits, having the e-filing. So all of that really falls into digital tax administration 2.0. Now, what is really digital tax administration 3.0? And I really like the analogy there. And the analogy was really about, moving the current, thing that we are very used to, basically driving cars by ourselves, to driverless cars or self-driving cars, right? And so today, for all of us who drive cars, we need to go and sit for a test. We're given the rules out there. The rules are set out very clearly. You can only start to get a license after you turn 18. Then you need to adhere to the speed limit. We are taught about the traffic lights, the red, amber, and the green. And then what happens is, once you get the license, you then need to obey the rules. And to help with the enforcement process, really, then there are the speed cameras and other traffic violations, right? And we're all familiar with this. The one point of this is really a lot of the compliance is with the driver. I'm not going to lie, right? Many of us in Malaysia, at the appropriate time, I'm sure some of us have sort of beat the traffic light. Maybe in the late hours of the night when really the road was empty. Some of us may have also beat the speed limit when we thought we were rushing for something. So it is really self-compliance, right? It is a voluntary compliance to a large extent. Now, when we move to this selfless or driverless car, compliance gets removed out from the driver. Now, the car, it's now, there's algorithms that makes complex decisions. There are sensors picking up information from the road, from other cars. There's integration of data from other systems. There's alerts for exceptional cases where human intervention is needed. Now, imagine digital tax administration version 3.0 to be something like that, where compliance is removed from the taxpayer. We get a little bit of a feel because in the same report, they did share about personal income tax filing. Actually, today, if the government wants it, and with maybe a little bit more effort, the individual tax returns can be automatically prepared, self-generated, and the tax authority can just issue the tax return, provided they are connected. Now, and I'm going to share this example, right? One of the reasons why capital gains tax is now being brought up in a very big way is, as I hear, the Inland Revenue Board wants to tax, those traders in the share market, those that made a killing during the pandemic. Maybe for they sort of traded in some of the counters that had made huge gains thanks to the pandemic. And really, it is because of the voluntary nature of compliance. Now, we are all very clear, trading income. I don't need to really introduce capital gains tax to tax trading income. The existing tax legislation, it's clear enough that trading income is within the ambit of the Income Tax Act. The question really is, are we really compliant? Now, if we move to this digital tax administration version 3.0, basically it talks about voluntary compliance, or rather automatic compliance without human intervention. So imagine the technology is such that when a person trades in the stock market, automatically the transactions are connected with the LHDN. The LHDN picks it up. The gains are automatically reported, and LHDN then computes the tax for you, and out goes the tax return and the sort of the bill of demand for tax. Now it's really the version 3.0 tax administration. Now, when we do this, if I can have the next slide, please. I think we can keep, and as Dr. B mentioned earlier, the R2GT contribution to tax, the tax pie of the country is really nominal. And I don't expect, introducing capital gains tax is going to give us a sort of a big boost to our tax revenue. But going in aggressively on, version 3.0 of the digital tax administration, it's going to automatically increase tax revenue. And I want to share a real life example. So Mexico, I'm not saying Mexico went into full blown, but all they really did was went and adopted e-invoicing. So every transaction that was done in Mexico has to be done via technology. adopting e-invoicing. The agency, the governments were connected, the businesses were connected, and basically the tax authority or the tax administrator had real-time information on transactions. And they were then in a position to raise tax assessment. Now, the Mexico study shows their tax revenue doubled in less than 6 years, yet income tax evasion rate reduced by 49%. Of course, they also had the value add tax evasion rate reduced by 44%. So that, Doctor, just in a very brief way, I just wanted to share this concept. It is out there, and I think it's something that I think the country should really focus on. And without introducing new taxes, you're looking at potentially doubling the tax revenue.
Okay, I think this is all about, in a way, digitalization of tax administration. So I think that's very, very valid. So we talked about economic issues, some of the issues with regard to our tax structure. We then now looked at the administrative aspects, and for participants, all of whom, most of whom are practitioners, some are in the corporate world, you need to also be aware of them, because authorities moving into the digital era and digitalizing, you also need to be aware of what's happening, because then you need to deal with the authorities and need to advise your clients. So that's why it's important. And that's why we hope authorities will of course, do share with us of where they are going in this area. So I thought maybe let's look at the digital economy in some ways. And I wanted to ask Puan Rosita about the aspect of digital service tax on digital services. That's one area in terms of us looking at a potentially new source of revenue from an indirect tax point of view. So we do tax the local service providers. That's all service tax is applicable. And then we try to tax the foreign service providers. I just wanted to find out, for the benefit of participants, how's the progress of that? How is the collection been? Any issues that have been faced, and perhaps that's also something that could be expanded in the future, depending on revenue. Over to you, Puan Rosita.
Thank you. Thank you, Dr. V. So can you hear me? Yeah, okay, good. A very good afternoon to all the panelists, Dr. V and Mr. Amajid, as well as Professor Ye. So, okay, thank you for inviting me, Mata and MIA. Actually, as everybody knows, that we are implementing the service tax on digital service, which we call it STOTS, since 1st January 2020. So it's mean that all of the foreign registered person, or we call it FRP, who are providing taxable, digital services to Malaysian consumer, will have to be registered and collecting, charging the service tax to all the consumer in Malaysia, and then pay the tax to RMCD using the return, the SST for this stock returns, which we call it the ST02. So meaning that now actually the foreign registered person paying the tax for complete 1 year. So actually before we implement, we only targeting about 100 company will register and collecting service tax from the Malaysian consumer for this implementation. But luckily we exceed our target, and then now we have more than 200 companies registered, and we are actually collecting more than 500,000 now, but we are collecting more than 500 million, which is actually we target only 300 million before we implement the stocks. And I think there is a few company which are actually supposed to register, but then we find out because their competitors actually already registered, and then I think we will look at it because it is already 1 year, and then we will go to our second step, which is go for the compliance. So the main issue that are actually raised by this implementation is actually other country, other jurisdiction, they implement these digital services from foreign company using the VAT or GST, but then we are implement it under Service Tax Act. So it's slightly problems, and there are a few lacks of provision in the laws, but we try our best to solve it. And the other issue is, I think it's not so big, but then this about the procedure of receiving money from outside Malaysia, because RMCD is the only agency in Malaysia receiving money every month and maybe every day. And so maybe we should suggest some improvement on the procedure related to this issue to higher level. And then the third one is about the actually the compliance. As I said just now, we have more than 200 company, and then we find out that there are few companies that actually should register under this stock, but then they don't do so. So we have to do the compliance step after this. And then this one just now Dr. V said that should we widen the coverage? I think yes, because we will propose to the MOF that we should widen the coverage if it is necessary, and helping the local industry, especially to level playing field. And I think we want to avoid the gray areas, and of course to increase RMCD collection. But any proposal for from RMCD will be analyzed and approved by Minister of Finance before any changes in the laws. That's all for now. Thank you.
Okay, thank you. So 500 million or 500 million of revenue. And your customs is quite happy because it surpassed your target. But are you happy when you compare this with foreign countries? Some countries have already had all this success. So maybe RMCD should be having a higher target, because as you said, there are some companies not yet complying and so on. So the question that rose when we talked about taxing the digital economy, and we started coming out with this digital service tax a few years back, was because other countries started implementing this. So we say, why not we do it while we are waiting for some OECD finalization of what is the global kind of a tax to impose and so on. So many feel that this can earn more. And then the issue, I hope customs will bear that in mind and see how do we compare with other countries, perhaps of a similar size, whether in Europe or elsewhere, who have implemented a similar kind of tax, be it a consumption tax, be it a VAT, or be it a service tax, in a way similar coverage. So we should do that, because then there's another way of trying to match ourselves, benchmark ourselves. So we hope the customs will do that. And that leads me to one more question, perhaps again for Puan Rosita, but Professor Ye also can perhaps chip in. The other issue was about some of our exemptions that we have. You know, in this country, we have a lot of exemptions here and there. And I also feel that one of the ways forward for income tax is to try to remove some of the many exemptions we may have, provided there is an economic benefit to it. That's one. But for customs, designated areas, special areas, the tax-free islands that we have. And the last budget, we had a bold announcement by the Minister of Finance on this issue about cigarettes, and then Langkawi again. And then they said we want to now tax it, which was bold. In fact, I thought even bolder would be removing the whole tax-free status of all these islands, because we all know, and I'm sure Rosita in customs, you all know, there's a lot of abuse of this particular exemptions. And yet the government of the day continues not to do anything about it, but takes small steps. And because of political pressure here and there from Ministry of Tourism and local players, and I'm amazed how local players in Langkawi say they, without the duty exemption, they will collapse. And it is amazing to hear these stories played out by the media, which is illogical, to say the least. So the issue is, does customs see a future in terms of slowly removing designated areas, special areas, and tax-free islands, and have a standard kind of a tax across the whole of Malaysia? Difficult one. I know you're not in maybe the right section to make that decision, but any thoughts on this?
Okay, thank you, Dr. V. So actually, our main objective for introducing these areas is to facilitate and give special treatment to the industry. For example, for the free zone, we established to facilitate export-oriented manufacturing activities and to encourage trade activity, including trading, bulk breaking, grading, repacking, and labeling. At the same time, it is our aims to attract investor, foreign tourists, and local tourists also. But at the end, we will face the complicated in the implementation of our taxes. Actually, this area are meant, for exempt the custom duty as well as sales tax, because sales tax import are related to the goods to or from those area to principal custom area or PCA or Malaysia. Actually, the treatments is slightly different in the treatment of service tax, as mentioned under Section 3 to Section 55 Service Tax Act 2018. Only certain services specified in the laws are exempted in those areas. Actually they don't enjoy all the exemption on the all taxes. But if we decide to remove the treatment in those areas, I'm sure it will affect the industry, as Dr. V said just now. But actually, we need a detailed study before planning to remove this facility. Perhaps we will maybe slowly reducing the exemption of facilities for this area. Okay, that's my comment.
No. I thought customs already did all their studies.
Yeah.
Anyway, sorry. So what I wanted to say is I agree with the concept of a tax-free zone. Right? I mean, that's necessary for breaking bulk, and then it's merely about goods coming in, modified a bit, and then goes out of the country fully for export. So that's a tax-free zone. But tax-free islands and saying tourists come to Malaysia to enjoy tax-free goods is actually, in my mind, utter nonsense, but that's no longer the case. Most of the jurisdictions overseas have also no longer have duties on this kind of product. So anyway, food for thought. Let's, in the interest of time as well, because we also need to give some time for questions later, but I wanted to ask, do all of you agree the shadow economy, taking care of the shadow economy, and that probably through the effective tax administration will probably generate some substantial revenue to the country as well. And I think Amarjit's hypothesis that he was presenting was basically, given the performance in other countries, that the administrative improvements would actually be able to generate additional tax revenue. And for the time being, we do not even need to worry about capital gains tax or wealth taxes and so on. And those taxes can come much later in life when we become a high income nation and so on. But these measures that administrators can take will probably be able to generate quite a bit. And do you agree with that, Professor Ye?
Yeah, thank you. Now, there was a study by the IMF of the shadow economy of 158 countries over a 25-year period from 1991 to 2015. And what's interesting here is that they estimated the size of the shadow economy for Malaysia at 31.5% of GDP. That means based on the current GDP of 1.5 trillion, this 31.5 is almost equivalent to about half a trillion, 500 billion. And if we take a projected a tax of, let's say, a current tax direct tax to GDP ratio of about 10%, you'll be getting 50 billion a year just by taxing the underground economy, provided we are able to do it adequately. You see. So that's a challenge. This is just an estimated amount, but I think as Dr. V has pointed out, improving tax administration, reducing regulatory burdens, enhancing transparency, all this would help to reduce the incentives for informal activities, especially those that are driven up by exit factors because they do not want to report because of regulatory burden, administrative constraints, and all this. So I think the challenge here is to, when we do the other parts of the restructuring of tax system, including improving the tax administration efficiency, we are, as well as increasing transparency and engagement and all that, we are at the same time actually reducing the shadow economy. So all these are complementary efforts that, if they are taken together in a well thought out strategy, and especially given that we have all the templates in place from around the world, we should be able to. So our challenge now is to look into the execution problem, how we can implement them. So the implementability, maybe some consultants or some government so-called departments can focus on the execution part of it, how to get all these gelling together across all the ministries.
Yeah, I agree with that. I mean, but not necessarily about getting consultants to do all this, because I thought the authorities can do it, but I'm not sure, as I said, whether the authorities are really getting it right. And the challenge here is we sometimes do things because others are doing it, but you don't know really where you're going with it. And then government spends expenditure on this in terms of IT systems and so on and so forth. And then it turns out it hasn't been successful. So this has been my concern, where we've spent on various things and then doesn't realize the benefits. And then we say, well, maybe it's a wrong advisor, wrong software developer, wrong IT guy, and let's attend it again. And this has happened time and time again. And I am a taxpayer, as all of you are taxpayers, and our money is being wasted. So that's my point. So I thought the other, and I rightly pointed out, I think the conclusion that we can all definitely come is that improving tax administration using technology and digitalization is the answer. And you then get all the, what they call it, the touch points and the information flow, and you can then raise your taxes where accordingly you should impose. So right now, sometimes you wait for data from the taxpayer, and then that's the amount of tax you collect. You have other ways of collecting that data and not relying only on the taxpayer. With so much of data collection, but nobody is really sharing this among government agencies. Why is that so? Why can't we have a national data center where the relevant agencies can share data from? What is happening there? Why can't that be done? Why can't ministries talk to each other? We all elect a government, and the government within divided into ministries, but the ministries don't talk to each other. So question therefore is systems don't talk to each other. So we have an underlying problem in terms of all our systems being different. And therefore we have this issue of my ministry, there's your ministry, don't disturb me, Mana boleh. So how do we move forward if we have this kind of culture? So I wanted to also ask, perhaps before we move to some questions to Puan Rosita, GST, bila nak datang?
I don't know.
So, no, okay, I agree. I don't expect you to give us a date. But the point was, panelists anyway, Amajit, Professor Ye, we all agree that broad-based consumption tax is the answer, right? From an efficiency point of view. So I think it's a given. But perhaps service tax and sales tax should be combined first, and then widen the coverage, improve its efficiency, and then slowly we can convert it into a GST. I think that could be one way of going, right? Then you don't disrupt the taxpayers by introducing a new system altogether, but you convert it into a system along the way when everybody has got used to it. So that may be the answer. And pandemic is the wrong time to widen the base. That's the other challenge, because then your prices will increase and so on. So I think we all know it's effective tax, and eventually it should be there because of checks and balances. But I also want to correct everyone's view, and maybe you can chip in as well, anyone on the panel, is that GST alone is not going to solve our problems. GST doesn't necessarily bring you more taxes, more tax revenue. It's a coverage. It is wide, therefore you get more taxes covered. But it's also got the control mechanism, the audit process, the invoice. That's the good part about the GST. And you widen sales tax and service tax, enforce properly, you also will collect revenue. And so it's possible. And but again, that will happen down the road. And so therefore, right now, logically speaking, the shadow economy and tax administrative efficiency is the immediate answer that we should be looking at while we work towards pushing the economy further, and then slowly moving into other taxes over time when we reach a high income nation and so on. I think that's probably a good way to conclude the discussion. And I hope all panelists share that that's probably the way. And my final question really is, I think I already answered it. The way forward for tax reforms should be, see, do you agree with an incremental approach or Big Bang approach? Big Bang is a 5 to 10 year plan made public. So I just wanted to have final views from each of the panelists about incremental versus Big Bang. Perhaps Amarjit?
Thanks, Doc. So I would say at the very least, even if we don't want to, and we cannot, because it's always a balancing act, right? It's about the resources that we have in play, and also getting the buy-in from everyone, right? I think the GST was a clear example where at some point we didn't really get the buy-in from everyone, and maybe the result would have been different if we would have all spent a bit more time to get the buy-in. So it's a balancing act. My take is I think we should have a well-thought, a properly consulted a blueprint of where we want to be. And then we need to think long-term and have a sort of a proper roadmap in terms of, which are the changes that are going to be coming in when. And I think we also then need to accept that, these changes are going to take time to bear fruit. There are studies on tax reforms of other countries. At the very least, you are looking at between 2 to 7 years before you start to see the results. So have a blueprint in terms of where the end game is. How are we going to? What's the tax administration going to look like? How the tax framework is going to look like? The roadmap there, how long that is going to take. And also, I think the courage and the patience, I think, to, once we've introduced it, it's not, we get some feedback from some people and then immediately do a U-turn. I think that sometimes does a bigger damage than, we think it will happen.
Professor Ye, Big Bang, incremental.
Yeah, I would also concur with an incremental approach, but with a clear roadmap, and then combined with very good consultation processes as well as public relations campaign, and then importantly, effective monitoring, evaluation as well as reporting mechanisms on the outcomes. See, and then I think we are awaiting the 12 Malaysia plan to be launched. I think some kind of tax reform should also be built into that 5-year plan, because what's get planned becomes adopted as policies, especially in terms of interministerial coordinations in carrying out some of the related reforms. Because as we mentioned, even GST is just not enough to just focus on a single reform. We need a comprehensive approach to tackling some of those the challenges that we are facing in terms of reaching a high income or developed status that requires not just a tax system, but also a very good sound expenditure review, and importantly, a well-functioning private sector to complement an efficient government delivery system. So all these we should refocus and also accelerate our implementation to be more aggressive and more bold in terms of carrying out some of these restructuring.
Puan Rosita, your incremental versus Big Bang approach?
I agree. I will go for the incremental approach. Because we should start slowly, step by step. But then, as Professor Ye said just now, we should have a roadmap to what is our big objective, maybe for the next 5 years or 10 years. But then I think our government already start the step to way forward to the tax reform.
Yeah. Okay. So I think that sort of gives us the things we should do, right? And I think Professor Ye did summarize that very clearly, as did the others. A plan, long-term plan, incrementally introduced, but there is the issue about communication. There's the issue about follow-through. There's the issue of looking at do the particular initiative succeed? What's the outcomes? If they don't, you can always tweak it as you go along. So those are the challenges we have. And actually, to any consultant, any tax practitioner, any accountant listening in, that's the way we do things. That's the way we in private sector would do it. So we all of us offer our services to the government. We can help do this for the government if you want us. Happy to help. With that, can I just move to address some of the questions and questions that have been asked on the pigeonhole? Could the organizers put up some relevant? Yeah, we won't have time for all, but let's just consider this. This is a bit of a nitty-gritty issue. I think maybe this is something we best not for tax reform forum. And this is a very administrative thing. So perhaps we will leave this to a later session. And organizers could cover this at a later session where there is some points being raised. This one, 11 votes, 2 dependent. Yes, we know that. And I think here, in a way, I think the panel has answered this. Alternative sources of collection. We are saying work with our existing income taxes and existing indirect taxes. Focus on improving administration, go after the shadow economy, collect and revenue from that, and that actually may be helpful for a few years while we develop the acceptance level in terms of the other taxes that we want to introduce, capital gains tax, wealth tax, whatever, GST, but some of this will only come when we are at a certain stage of our economic development. So I hope that answers that question on behalf of the panel. Sorry, I am just answering on your behalf as well. If you agree with that, then let's move to the next one. Okay, again, this is on your imported service tax. Okay, we're not looking at, this session is not a technical session. Here the question is very specific. How do consumers know whether they should compute imported service tax? I don't know whether, sorry, the question got taken off. Were you okay for that question, Rupan Rosita, earlier on the imported software?
Okay, but as you know, as you said just now, the question is too technical. Maybe I will entertain later.
Yeah, okay. And this one is about what is possible tax reform wise. Yes, capital gains tax, we all know. Higher digital tax right now is service tax 6%. Maybe it could be higher, but remember, at the end of the day, it impacts on the end user as well. It'll be recovered through, right? Carbon tax or green tax is very easy to talk about. I don't know whether Professor Ye had any comments on this. Should we not, too early? It should be in our plans, but you're not going to get much revenue, I guess. Yes. Yes.
No, I would like to refer to the earlier on the digital tax. I think the current news, the latest news is that the US is actually imposing tariffs on countries that are collecting digital service taxes. So we have to worry about that too if we are too aggressive on that. Now on carbon or green tax, I think it's a matter of time because we like to change behavior to taxing what they call negative externalities or what they call pollution tax, you see. And also importantly, how to shift towards so-called incentives that encourage sustainable development, you see. So I think that would be the way to go. And in the corporate sector, we are already seeing the incorporation of ESG, environment, social and governance ratings or issues into their risk management framework, you see. So that is already moving, driven a lot by corporate initiatives. So we are very, very so-called happy that the private sector is embracing so-called sustainable development in all their activities. So I think that shift will come, and now it's just for the government to look at how some of the green tax can be incorporated as part of the revenue diversification efforts.
Yeah. Okay, so I think from that point of view, in many ways, we have a number of incentives we introduced some time ago for green taxes. For example, buildings which are efficient, using less energy, effective use of water, and so on. But the issue here is at the end of the day, it doesn't filter down to the average man in the street. Educating and all that is continuing, I guess. Then the other issue is pollution. Unfortunately, a lot of these businesses that are polluting the environment are businesses that we are encouraging. And so the authorities need to move in that direction. And I think everything goes together. Corporate world is adopting the ESG aspects and sustainability. So in the end, it will filter down, but you also need to work side by side with people, educating them, slowly removing those kind of businesses which pollute, looking at technology, improving, getting machinery so that you don't rely on foreign labor. Again, it's not being pushed very hard because businesses fight back. We have strong lobbies, and these are the challenges. So that's why when you have an emergency declaration like what we have now, it's actually a great opportunity to force things through. But then you worry about an election coming and you don't dare do it. So in the end of the day, there we are. So the last point here was remove RPGT service tax. Well, only if we can get additional revenue from the other taxes that we are thinking about, then maybe, but I don't think RPGT will disappear. It will eventually be there even when you have a capital gains tax. Service tax basically will still be there when you have a GST anyway. So, okay, next question perhaps. Okay. The government focuses on trying to raise new trace tax collection, but wouldn't this be troubling to taxpayers? Well, I'm not sure we can. This is a question that may have many other aspects to it. Troubling in what sense? Troubling perhaps because you will end up paying more. I think that's not what we are looking at, right? We are looking at tax rates remaining where they are at the moment, but going after those who don't pay and who underpay, getting more data and information. So that's what I think the panel was talking about. But the World Bank, I think, is talking about increasing taxes on personal tax rates, but more for the high income level. And that will trouble the high income individuals. So it's a chicken and egg. I don't think participants should worry about the fact that when we talk about reforms, which may involve adding on new taxes, the issue is burden. And I think the panelists do agree that you need to maintain burden. You shouldn't be overburdening certain segments of society. So it's very clear. Let's just answer this question, perhaps interest of time. Compete for FDI in ASEAN, we need to make our tax rates competitive. So perhaps Amarjit may have some quick comments.
Sure. Thanks, Doc. So I think we need to be balanced. I mean, I see the recommendation of 16% flat rate that will be even below Singapore and Hong Kong, I think. So whilst I'm personally an advocate that we need to bring our corporate tax rate down, I think 16% sounds a little bit too low given Malaysia's status. I think 20% is where our neighbors are, and I think if we can come there, we should be. If we can come there gradually, I think we should be okay. At the same time, I think we need to also be mindful that countries that went maybe a little bit too aggressive on reducing corporate tax rate. So, for example, recently UK announced that they will bring up their corporate tax rate, right? The US that went down from 42 to 21. We're now also hearing that they might come up slightly as well. So I think all in all, we need to be balanced. And and with the BEPS initiative that is coming, there is, and one of it's under BEPS 2.0, Pillar 2. It's about sort of a minimum tax that needs to be imposed, and one of the drivers behind that is to avoid a race to the bottom. So, I mean, I don't know what the right rate is, but I think in doing all of this, as much as I'm an advocate of bringing down corporate tax rates, and broadening the consumption tax, I think even the bringing it down, we need to be balanced.
I thank you. And I also think that we shouldn't be looking too much at Singapore alone. We should be looking at the other ASEAN countries as well. We focus a lot on Singapore and Hong Kong and try to be like them. We will never be like them. I think I just like to be very, very clear on this. We rather should be looking at the rest of ASEAN, be ahead of the rest of ASEAN, excluding Singapore. And that may be the right strategy in terms of going forward. Yeah. Next, is there any more questions we can take? Shadow economy, there's one again, but that we have discussed a little bit. Then there's something on tax refund delays. Again, that's a technical matter, which we will look at it. And then there is tax-free islands. Let's just look at this tax-free islands. Okay. And this question could be upon Rosita. Tax-free islands attracts visitors. Isn't this unfair to other states? Because why would there be tax-free somewhere? Okay. I think you have some comments, upon Rosita, this general.
Yes, of course. It is unfair, but then as I said just now, we want to, at least give some incentive, especially in the tourism side for this tax-free island. But then we will look at it, and then one of the incentive that have been removed, especially for the tobacco, maybe we will look at the whole incentive given to the tax-free islands so that we can have fair treatment to the Malaysia, all over Malaysia. So.
Okay, I think the message here is that yes, everyone should be on the same level playing field. But when we introduced this tax-free status for some of the islands, it was to attract tourism at that time. They were developing to also develop those particular islands. And the interesting thing about Malaysia, as maybe other countries as well, is we introduce something, we find it very difficult to remove it. It becomes a permanent feature. And this is the problem we have. And so the way forward, I think the authorities are looking at it, and the way forward is about giving time-based incentives for a few years. And tax-free islands should also be given a certain time. Say from now onwards, it's only for 5 years. And then let them see what they want to do. And most of our other incentives also are time-based in income tax. And I think that's the answer the Ministry of Finance is moving to. Perhaps it's bold, but just announce that all tax-free islands, your incentive now is only until, let's say, 2025, 2026. Then you see all kinds of drama, but never mind. It gives you an opportunity to test the market. But at the end of the day, you need bold political leadership to push this across. And I just wanted to address one last point before we conclude. There was a question earlier, and I did allude to it, about politics and taxation. And I think the reality of life, if you look at all countries, many countries around the world, it does play a part because the government of the day may have a different agenda and different focus. And this happened in the early years when we had GST in different countries, Australia being one example, and there was a pushback and the government changed. And similarly in Canada, there was some ministers were removed because of GST at that time. Politics plays a big part because unfortunately, this is the way it is. But I'm a great fan of the fact that you set an economic plan. For example, nobody fights back against the 12th Malaysia Plan or 11th Malaysia Plan or whatever. It's a plan, and we carry it through. And many of us don't even read it in detail. When it comes to taxes, we become very we can violently object to something which may be increasing our tax rate. So tax becomes personal, and therefore it affects the voting public, and therefore the government of the day relies on votes, and therefore therein lies the interplay between politics and taxation. Sad state, but it should not be that way. We decide on an economic path. Like now, we talked about many things during this panel session. We talked about many enablers. We talked about what you should do. And actually what we talked about, many have been talking about this for years, and some of us have also been on other panels. Why is that not being adopted by the government? Because that's very clear. That's the approach. Unfortunately, if governments were focused on the technical side of things, we would find life would be so much easier. But life is also very interesting to some because they look forward to elections, and then look forward to changes and influencing government. So my last point, of course, is that perhaps the civil service has a clear role, and the civil service, like the MOF people, the IRB, and the customs people, they should have clear plans, clear agendas set without looking at the government in power, and having some clear items and then sharing that with government, pushing this across, and not waiting for government to say, yes, I think let's listen to what you have, and we do this, we don't do this. I think civil servants have the power, and they should be developing plans and putting it forward to the political leaders. And if it gets a pushback, bring it forth again subsequently at other opportunities. And I feel that the civil service has the power, and they should be exercising this power for the benefit of the Raya and for the well-being of society as we go forward. With those words, and I would just like to perhaps conclude because we have run out of time. I know we could have spoken a lot more on this, Professor Ye, Mr. Amajid, and Puan Rosita, but I think we managed to say what we wanted to say in the context of this particular session. So we know we are heading to something. We're still waiting to see whether that something we are heading towards is concrete and doable. But we have given a number of suggestions, and I hope the authorities and the parties and participants appreciate where we're coming from the point of view of the big picture and the future of the nation in terms of rebuilding the economy together. So I thank my panelists, and I move, can I please pass it on to Farahin, the MC, to take on the next stage of this particular conference. Thank you very much all.